where the individual investor is doing well and the institutional investor is doing well is the barbell concept. They can put real money into the front end of the curve and get a pretty nice return there without much risk. So therefore, it allows them to take a little bit more risk someplace else. Yeah. 2 years or less. Look at the 6 months, et cetera. So that allows them to take a little bit more risk on the other side with regards to equity.
What are individual? I mean, is that a play that happened just at the beginning of the year? This is just since January that this play's come back in?
I think once you saw the 2 year just creep up and up and up, there was a time at which we said, from now on, you can have asset allocation
at 5%.
And fixed income's a legitimate opportunity. It could have started at 3%, could start at 4%, but there is no question. Whereas there has not been a real great opportunity in fixed income without taking a whole lot of risk for a long time. Now it's pretty much risk-free to have a nice return while you choose to either be on the sideline or why you choose to be more aggressive with regards to the equity market.
Are there individual investors who are still sitting on the sidelines because they're confused by this? How active is the individual investor? How much damage was done by the drops in the averages last year?
Well, I think a tremendous amount of damage was done with regards to the drops with the averages. But I think, again, you can't panic about that. You've got to have a well thought out plan. If the individual investors or any one of us or institutional investors were buying with the significance of the drops we had near around the lows, they are home runs. They're incredible returns as far as the portfolio goes. So I think discretion is a better part of valor. I think you got to recognize the Fed is tightening. That's it. Be comfortable with that. And I think you offset your risk. Stay involved with the market, but offset your risk by what you're doing with the front end of the yield curve.
We've got some big data points that are coming up. You've got jobs number tomorrow.
Yep.
Next week, you've got inflation numbers that are coming. And as you mentioned, Jay Powell is really data dependent at this point. Markets are under pressure this week because we think he's raising rates further and faster. Could that whole scenario change pretty quickly? Just if we get numbers that are cooler than anticipated?
I'm going to say no, but there'll be a caveat with that. I say no because we can get an out-of-line number, good or bad, at any time. We know that. But that's one number, and the previous numbers still have to be adjusted, and we're going to wait a couple of weeks. There's going to be more numbers coming out. So I think the market will move on a big number that's a surprise one way or the other, but we can't overdo it because one number does not determine ultimately what's going to happen.
Are you surprised S&P's just hanging in there, though?
I am a little bit. Yeah, I am a little bit.
Is it like people are just think sooner or later there's going to be something good happen, and they want to be there. If it is, if you're going to wait thinking you're going to time a 5% further downdraft or a 10% for that's hard to buy exactly down 10% from here. So it just almost seems like they're waiting. They know sooner or later. But what if things never turn? What if we're in one of those 5-year? What if we're in one of those 5-year periods where stocks underperform?
Well, number one, I think that's the advantage, though. Wouldn't you think, in terms of the fact that fixed income gives us an opportunity we haven't had for a little while? That was my point a minute ago, right? No, but think about it for a minute, right? You talk about a 5% down move. Well, if I'm getting 4 to 5% of my portfolio by having my money in 2-year notes, I can afford to take some risk over here. I can do that. Whereas if I don't have any place else to go, I'm either going to be in or I'm going to be out of the market.
Right.
I'm going to have some cash. You shouldn't be 100% in. You shouldn't be 100% out. Again, discretion is the better part of valor. Be thoughtful in terms of how much risk you want to be able to take.
Joe, can we talk sports again? Just back to the NCAA.
Gambling? To go back to the dark ages?
No, this is going, the NCAA and the changes that are taking place there, athletes being able to get paid. You've got a new president of the NCAA, the former governor of Massachusetts, who's coming in. It's kind of roiling things. You're somebody who still is very involved with what's happening in football in the NCAA. What happens?
I think, well, number one, I think Charlie Baker, being a politician, now the new president of the NCAA, I think a real question is how much authority does he really have? So 2 years ago, when Mark Emmert pretty much abdicated any responsibility for NIL, which is the most significant thing to happen in the history of college sports, and the NCAA wasn't anywhere to begin with, and that they lost a lot of credibility. All right, now to what extent is Baker going to be able to bring that back? I believe, and by the way, I was meeting with the Knight Commission the other day, and they had actually said back in 2020 that they believe that college football will ultimately be independent, break away, and have its own ruling body. I totally, absolutely believe that. The money is
Break
so...
away from the NCAA?
Break away from the NCAA. There is so much money in Power 5 football, whether it's the college football playoffs, which is now going to go from 6 to 12 teams. Yeah. Today, I think that generates about $500 million. In a couple, 2, 3, 4, 5 years from now, that's going to be $2 billion. $2 billion. We talked a little bit about the TV revenues that the Big Ten has negotiated. This past year, I think each team in the Big Ten, whether you were Rutgers or whether you were Ohio State, got close to $70 million. 3, 4 years from now, with the realignment of the league and Southern Cal coming out, UCLA coming out, that number's probably going to be close to $100 million.
Wait a minute. Rutgers doesn't get the same as Ohio State.
They do.
They do.
What?
They do.
Oh, my God.
They do. They do. You know why? They're in the Big
Ten. Don't do that.
They're in the Big Ten. So I believe that Power 5 football does not need the NCAA, and I think, but it needs maybe a little leadership, I think, from the NCAA to help get that done. And Baker, as a politician, not that anybody's asked me, but as a politician, he knows how to compromise. He knows how to give and take. And a good politician, if you see the writing on the wall, you want to forerun that. So this is going to happen. So if he recognizes it's going to happen, he could step up and say, I really believe this is something that should happen. It's in the best interest of all college sports. I'd like to see it happen. I want to help it happen. Now, that gets rid of football, right? But it also allows him with the other levels of football and all the rest of college sports, that maybe gives him more credibility that when he has something to say, he's going to be listened to.
Yeah.
I believe that happens. I mean, if you watch the money, it makes sense that that's the way it's going to go. And these NIL deals could be extraordinary.
Hard to imagine, yeah. Joe, thank you very much. Joe Moglia, always appreciate it.
Welcome, Becky. Good to see everybody.
Thank you. It's nice to see you.
Coming up, we're going to speak with Texas Senator Ted Cruz about a long-running battle over an FCC seat